Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So we started today with some strength in the S&P 500 and we had a very tight range, very low volume, and then rolled over into the second half of the day with the bears taking complete control, led to the downside by the tech sector weakness. The tech sector has been weaker than the financial sector, notably Friday, yesterday, and today. Today, Facebook had some bearish news about the government potentially going after it, which is adding to that weakness in the sector. And the tech sector is seeing further weakness after hours right now. Essentially, you can point to the financial sector double topping. This is the 5-minute time frame. High of the day, consolidation for a higher low, double top, and then this candle right here is where it unraveled for the market bulls. Huge bear volume and the double top into a bear break of support and then weakness into the end of the day. Bottom line is the financial sector is still holding on much better than the tech sector. And at first I thought, tech sector profit taking before we get into the heart of the sector earnings. But after the news came out today, it is looking like the tech sector is a bit scared of the government coming in and potentially breaking up these big companies, whether it's Facebook or Amazon or whatever. That's the bearish reaction we're seeing right now. So we'll go into the regular technical analysis in just a second. Just want to point out my day. So I had a good trading day today and I lost money, which is an interesting way to say it, but I made a mistake. So I had a couple good trades. I was looking at Uber. Uber had a breakout today, and I was just watching the 2-minute time frame on that breakout. I saw this setup, which screamed equilibrium to me. High of the breakout, pretty big pullback for that higher low to form. And then we went straight up towards the high of the day, and I made a bearish entry at, 32.68, and I would have stopped out over 33. So if we just saw a V-shaped recovery and it was not what I was expecting, I would have stopped out for an acceptable loss. I was expecting a 2-minute equilibrium as the most likely scenario, so I entered looking for the lower high. I covered 30 cents lower, pretty much a percent gain, a little bit less than a percent gain, maybe 0.8, 0.9%. And that was just a quick little day trade scalp. So that was one little winner. I traded SPXL on a couple little bounces today at the end of the day. And certainly didn't look like there was much opportunity, but I love these oversold bounces. And I did end up playing a couple of those little bounces for about 10 cents on one flip, 12 cents on another flip. So that alone would be enough to be about a day and a half to a 2-day maker for me. But I also traded Facebook. And on Facebook, we had the all-out dump on the news. I played an oversold bounce here as well, and it went just fine. I played it earlier in the morning, and I bought and sold shortly after for a small gain just because the bounce wasn't playing out with any kind of strength, and essentially just that taking that tiny gain rather than waiting for a break-even stop out. And then I went about my day and then came back and realized that rather than selling my position, I had doubled down and entered a second bullish position. So in the end, I ended up with a 2-day loser on Facebook when I bailed that position after realizing my mistake. And the bottom line is, everybody makes those mistakes, and hopefully we have as a long a period of time in between those mistakes happening as we can, but they are inevitable. And I can remember back in the cryptocurrency space where I had a month loser of a loss where one of my stop orders, I guess I didn't put it in, or I don't know exactly what happened, but didn't end up with an order that I thought I had placed, and came home from dinner to see a month maker of a loss that fortunately I was able to make back in less than a week thanks to the cryptocurrency volatility. But the point of the story is I had a good trading day and I feel like I had a bad day because of that one little mistake. So my technical analysis was on point. My trading was on point. Aside from the execution of that one order, it's going to happen to me again too. I will make that mistake again sometime, hopefully in a year from now or more, maybe a couple hundred trades from now. It'd be great if it takes that long to happen. But the bottom line is, it's a reminder myself to pay closer attention, and it's also inevitable. I know it's going to happen eventually again. So can't get too beat up on that. Can't let it ruin my day and have to start with a fresh, clean slate into tomorrow. So looking at SPY, again, the most important support level for me is the daily higher low. As long as 260, make that 296.99 is holding, the bulls have complete control on this daily time frame. If that breaks, bring on the weekly equilibrium. That will be our lower high, and we'll then be looking for a higher low compared to 284.82. So that's the current setup. Lose the daily uptrend and the weekly equilibrium continues. Keep the daily uptrend and the bulls will be looking for an all-time high. We came very close to that all-time high today, pretty much 0.5% away, but end of the day weakness. Hourly RSI after hours here is getting close to oversold conditions, and next time we bounce, we'll just be looking for an hourly lower high to form due to the size of the pullback. So you can see it was just tighter, 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 and then like a rubber band snapping, bears took over. IWM, double top 154.98, 155.05, and then we started pulling back. So as far as I'm concerned, this is daily consolidation underway, looking for a higher low compared to 151.45. Again, a name like IWM is much more likely for a weekly lower high to be set because we're not close to that resistance as other names are much closer. So loss of the daily uptrend means our weekly lower high is set on IWM in this tightening range, and that will be something that we're keeping an eye out for. So QQQ, I'm watching the 4-hour time frame here, and we are right on the verge of a bear break. What I would like to see is that support hold for just clarity. High, low of the pullback, double top, failed to break resistance by 12 cents, and now we're right at 190.71 support. If this were regular trading hours right now, I would be bottom fishing this level. I would be making an entry here because the 15-minute RSI is in the teens and the 5-minute RSI is in the teens as well. That's my ideal scenario to be entering off of a key support level. I'm not doing that in extended hours because it is less liquidity, it's looser trading. I could not enter with the same order size that I would want to during regular trading. Why don't I just trade it on futures? Because I don't want to trade futures. I have enough markets between crypto and the regular stock market. The last thing I want to do is trade another market 24/7. I have all the trading opportunity that I personally need. So I just don't trade it. And that's perfectly fine. If we hold that support, or even if we break it, but just barely, and then see a bit of a bounce into tomorrow, we'll have this 4-hour tightening time frame on watch. If that level breaks convincingly tomorrow, we lose the daily uptrend on QQQ, and it will be the first to give us the weekly equilibrium. That will be our weekly lower high, and we'll then look for a higher low compared to 181.82. Keeping in mind that Amazon and Microsoft have earnings. Microsoft is tomorrow. I forget when Amazon is off the top of my head. Apple is next week. So that will be important as well. And if this weekly equilibrium is going to continue playing out on QQQ and SPY, and if we don't see a major reaction to the FOMC, which is in 5.5 trading days, I believe, it's entirely possible that we stay within this weekly equilibrium into December. So let's just say we see a little bit of a pullback with earnings and the FOMC adds a little bit of that pullback, but we still hold support, and then we look for a bounce. That easily can take us into Thanksgiving. So it will be very interesting because the tighter we get, the better, in my opinion, because the tighter the equilibrium gets, the more follow through you get when the break does take place. So XLF has been the reason that we've been holding on so strong, but then there was the straw that broke the sector's back today on this 5-minute candle. So the daily time frame, a little bit toppy. Anything above 27.96 is just a daily higher low. Our key resistance was 28.67, and we rejected from that level by 6 pennies. So the weekly equilibrium on XLF is in play as well with that resistance rejection. So as we've been talking about in the last few videos, top fishing plays for bears absolutely in play, and certainly adding some more confidence to those top fishing plays after how we ended today, and also hedging long-term bullish portfolios with bearish entries up at these levels is also a-okay for part of a game plan. XLV had a great start to the day. It broke weekly resistance, but then closed at the low, giving a lot of that back. Short-term support is the daily higher low of 91.35. Big bull move to start the morning and gave it all back and then some on big bear volume at the end of the day. Biotech sector, gap up open. BIIB had a gap up open. A lot of profit taking on that gap up open, so congrats to the bears that took advantage of that. And BIIB breaking its pre-market support added some confidence to biotech bears. So anything on the daily time frame above 77.79 is a daily higher low, so that is not at risk of being lost in the near term, but we are looking for a weekly lower high compared to 84.12 which is our last weekly lower high. The VIX, not really seeing much strength. Bulls want to see it up over 1520 to have confidence that this base of 1330 can hold. If it does, we'll be looking then up with a lot of space before the next resistant zone in the upper teens and low 20s. And looking at it from the weekly perspective, it would be the high, low, lower high, double bottom, and we would be looking for a weekly lower high to form. Gold, still sideways, waiting for a break patiently. Not surprised it's in a tightening range, as there's tightening ranges all over the place, but we are still within the range of this one day from October 11th. We're now 7 days trading within that range. Patiently waiting for a break on it and silver. No breaks in sight, but we've been watching this bull minor falling wedge. Daily higher low is trying to form here with a double bottom. Just barely a higher low formed here. And now if the bulls can turn this around and break 27.35, that will be a daily trend change, and that will be our falling wedge breaking bullish. Again, bull miners and bull gold wants to see a weak market, and you could see them respond to that today. There's our falling wedge. We could stay within it into the end of the month, but our eyes are certainly on it, and a nice bottom fishing play off the low. NUGT was a double bottom to the penny with its low of 25.80 and 25.81. So by a penny, a double bottom, have to break 29.24 to change the daily trend. Oil had a bullish reaction today, but only broke one of two resistance levels. So we had the high of the bounce, low, lower high, higher low, bull break, but we couldn't get over 54.91. So we broke one level, but not both. So bulls need follow through from here. 4-hour time frame will look for a higher low to form compared to 53.21, and bulls want to break 54.91. Tomorrow, there's the inventory reaction, which would need to be bullish for a bull break, as the bulls are trying to fend off the bear flag. If I'm a market bear and I'm top fishing all-time highs, or if I am a gold bull or a minor bull, I want to see oil break 50.51 on a weekly bear flag and drop to lower lows. I want to see the S&P 500 lose its weekly uptrend. Those would be all good signs if I'm either bearish, the market, of course, or bullish, gold and gold miners. Natural gas, we need a 4-hour trend change. If we get a 4-hour trend change, we will have a daily higher low established, which will be our right shoulder, and then we'll be looking back up at 2376 and 2384, our two key resistances. We are watching the inverse head and shoulders pattern. So again, it's just all different fractals of time frames on top of each other. We have a weekly chart where we're anticipating a weekly higher low is the most likely scenario. To see that happen, we need a daily trend change. To see that happen, we need a daily higher low to form. To see that happen, we need a 4-hour trend change. So if this inside bar breaks bearish, we'll look for a higher low compared to 221, and the bulls would then have to turn around and break 2306 for that 4-hour trend change. I'm done talking. Hope you had a good day. We'll see you tomorrow, and we'll see if the bears get follow through. So it doesn't take long for the mycelium network to take hold, maybe 2 or 3 weeks, and you can't really see the scope of this, but there are mushrooms all over this, which is a good thing. So this is where we're going to plant strawberries and a bunch of other stuff, but this mycelium network, number one, it breaks down the wood chips and turns it into soil, but they also act as little highways. So imagine just tons of tiny little roots all interconnected in one organism through the soil, and they actually can transport nutrients. They do studies where one tree can pass nutrients that the next tree is lacking through the mycelium network into its roots. Pretty insane stuff that science is only really just now starting to uncover, but it's always a good thing to see mushrooms around. It's garlic planting day. I'm going to plant some German red, which are the smaller ones on the left, and then elephant garlic on the right. And when I placed my order for the garlic, I forgot that the elephant weight would mean it's way less cloves, but we'll see what we got. We're just going to do the second half of this bed here, which is already onions getting good to go. Still got to thin those out as they go, but I just put them in some salad as they are being thinned. And you can see someone was digging around a bit in here last night, it looks like. Fortunately, didn't damage any of the onions, but I do have someone coming to give me an estimate on a fence and trying to get that fence up. The sooner the better. So they're going to go in the other half of this bed here. Just got to take up the cardboard and get any weeds out of there. This is straw that will go on top to keep them warm through the winter. And again, these onions and the garlic will both be harvested next summer. And we'll see how it goes.